Bitcoin could be facing one of its toughest battles yet, with the macro space looking quite uncertain during this period of quarter three. It's down 22% from its high in July, trying to recover from this drop. But things aren't looking as rosy for the cryptocurrency market, those beloved altcoins from the previous cycles that many are still dollar cost averaging. I've got the data on that to get through in today's video and some helpful tips and hints on what we should be looking at and when we should be getting into altcoins, just based on the data, not opinions, not our beloved projects that we need to be married to for the long term, just pure raw data. So let's get into those numbers today as we look at the macro landscape, not just Bitcoin, of course, because the financial space is made up of more than just our beloved BTC. So hit that like and subscribe. This is your home of macro cycle analysis, where we study the past to forecast the future. All of the videos are here on the channel if you want to go back through those and have a look at some of the recent calls and the history here. All right, guys, let's dive into what we're looking at first up. S&P 500, we just need to look at these briefly as we've covered them many times before. Day to day, week to week, not much has changed over the last couple of days since I made the last video. The price is at 4,500. Now, it's a good reminder that as we started to decline here, those 3 consecutive weeks of red, this was the major fear in the market. This was when the analysts, those big professional traders out there and the like, were telling us these markets had to fall further. And maybe they do. Maybe this is just the bounce back before we see further downside, because of course these moves do take some time. But as we've looked at before, we've gone through a lot of data that suggests throwing the probabilities on the side of the macro bulls that any of these moves to the downside should be great by the dip opportunities. That's if you're invested into the stock market. But of course, we're looking at Bitcoin and the possibility of cryptocurrencies going into this bigger depression. So why am I so focused on the macro here? Well, of course, it's the macro landscape. For cryptocurrencies, they need to have ultra high risk on environments. And right now, it's obviously not ultra high risk on, just meaning that we want to see the stock markets go up. We want to see everything sort of bubbly and everyone excited about their finances so that they start to gamble some of their money into the cryptocurrency markets. For now, like we've been covering through this period of quarter three, we're looking at something similar to what's going on here, textbook seasonal correction, where we basically see a low come in, a bounce, a potential retest, and then some higher lows, but all within a trading range. Could this low go lower? Yes, it could go lower. Could we see a bounce up and then another slightly lower low? That's all up to the markets to decide. But what we're looking at here is we are monitoring quarter three for a bottom, quarter three looking at August, July, August, September, and then of course, quarter four for the upturn, October, November, December, now that I've got my quarters right. And that's what we've seen over the last 40 plus years in pre-election years. Next year is the election year in the US. We're in the pre-election year. And unfortunately, or fortunately, most markets follow the US. Obviously, I'm Australian. The Australian market follows quite similarly. UK, Europe, you name it. Most of us are following what happens in the US. S&P 500 continues to track its seasonal tendency. So this was put out on August 17th, almost a month ago. Looking at the last 10 pre-election years, so that's just over 40 years, an average composite of the S&P temporarily peaks in July, bottoms in late August, and stabilizes through September. Now, that's not saying that we can't get a lower dip or a higher push, but it stabilizes and resumes higher in October. We'll be monitoring for another seasonal opportunity that develops. How's this looked since the 17th? Well, this is August 25th. The S&P put in a low in the week beginning the 14th, so it came in slightly earlier than the 40 years of seasonal data here. That's okay, we're still looking at a low. And what's happened since then? The market's come back. So what's happening? What does the seasonal data say next? It says we might have a retest. It seems like that's what's getting played out right now. We had the bounce and the pullback. Who would have thought that some of these seasonalities would play out time and time again? It's just human behavior, but we know that that's the same thing that we hear, and it will come up in these comment sections. Go and have a look at what people are writing, and they are looking for further downside because guess what's coming up this week? CPI data, then we have PPI data, then we have interest rates announcements, then we have the FOMC meetings. It's the same high impact news announcements events that come up time and time again, and the excuses that market players, investors, not having a go at anyone, but this is just how the mentality works, especially when we're new in the market, is we look for reasons why this is happening rather than just follow the price chart, which is putting in higher highs and higher lows on the macro scale. So I'm using the Gann swing indicator. You guessed it, there's a link to this in the top or in the video description, somewhere in the middle there. This is a tool that shows us the trends, and we can adjust this based on the time frames that we are looking at. Nice, quick, simple tool to use to give us the trends so that we don't fall victim to the news and the fundamental and the economic data that gets thrown out there, and we just follow what the market is doing and of course use the data to our advantage. So we're looking for a slight pullback here. We're going to get to the cryptos, all of that depression coming up as well, but of course we need to look at the broader picture. That's what we saw for this particular chart here, probably a bounce and then a retest of those lows, and then eventually once we get through to October, a push higher. That could be okay for Bitcoin, but cryptos are still looking like they are dropping lower. This chart just shows the same thing, and it's one that we've been following for the last couple of months here after the US S&P 500 is up 10% year to date in June. And then this is typically what happens. Sideways grind, and then we get the push up later in the year to see bigger returns, which is a good thing for BTC, which could then continue to crush the altcoins. The volatility index closed below 14 in the month of August. What happens here? Typically 1 month later, you see a positive return. So September, like we've seen here, it's a bit of a chop sideways period, looking at some lows and some bounces. The best case scenario, I think, is looking at a 2% gain a month later. But what we're more interested in is 6 months later, 9 out of 10 times, we see a positive return in the markets. So 6 months later. So that's why I keep coming back to the buy the dip opportunity, but really trying to specify that it's between Bitcoin and altcoins. If they're the only two asset classes you're looking at, if you're not looking at the S&P, pay attention to this stuff, pay attention to the macro information, the macro technicals, so that you can get a better perspective on when to get into altcoins. I'm not saying never get into altcoins. It just doesn't look like a great time to be getting into altcoins, especially when we go through some of the charts as well. The US dollar has also been on a rampage to the upside. We saw the breakdown back here in July, and that was pretty much near the peak of Bitcoin's cycle here. So we had the week beginning the 10th of July, and the US dollar bottomed on the week beginning the 10th. The interesting thing to note here, so this is one of the toughest battles for BTC, and then I'll get into the interesting thing here. We've had 8 straight weeks up for the US dollar, and of course, BTC, what has it done? Well, it's been down for that 8 to 9 straight weeks as well, but it's having a little bit of a recovery here. The thing I want to note is that BTC has come into the same low as the June low back here, but where was the dollar in June? It was higher, then collapsed, and then bounced back. So relatively speaking, Bitcoin's holding up relatively well, considering the strength that the US dollar has gone on in these last 8 to 9 weeks. So once we start to, or if we start to see a bit of a rejection here for the US dollar, that could be some easing for BTC, which again puts some pressure on altcoins. So on top of the market falling, and we can see these continued lower highs and lower lows come into the market, the dollar could also break through these tops and then come back to test the 50% level at 107, 107.2. So that's what we're on the lookout over the next couple of months as well. But if you are interested in more of the fundamental talk and how that's relating to the charts, check out the link in the top of the video description. We've talked about this in far more detail in our weekly free crypto and economic report. Absolutely free, link top of the video description, subscribe to that. And if you want to unsubscribe, that's absolutely free as well. But give it a go. I think it's one of the best investments out there because it's absolutely free. All right, moving on to BTC. Short-term outlook, and before we get on to the altcoins here, Bitcoin is continuing to rally after yesterday's move up of 2.75%, but at its peak from the low to the high, We've seen 5.7% on the day. The thing we were watching for was 25,700 to get a close above that level. So that's what I posted out on Twitter. If you're not following me there, you know the deal. Links are always in this video description just down the bottom. And that swing indicator that I talked about is right here as well. So BTC, that's a strong move. That's a good sign so far. We're 12 hours into the next trading day. Market is trading up. Let's see what happens after this next 12 hours for the close to see if this also closes up. What we're looking for are 3 straight days up, 3 green, well, basically higher highs, higher lows on the bar chart. So we want to see these things go a little higher here. The closes for the next move are above the top. So 26,500 and call it $50. That is going to be the sign you're looking for in the next sort of 24 to 48 hours to see if this market can continue the strength that it's seen from the previous 24 hours. Now that's the short-term stuff here. And just looking at this compared to the US dollar, as you can see, it's had some slight weakness over the last couple of days. Maybe it's just getting a slight pullback before another test at the higher prices. So we're paying attention to all of this sort of stuff. As Bitcoin is looking okay, but unfortunately, if Bitcoin does well, altcoins are going to get crushed against their BTC values. The USD values might be going up, but they're going to keep going down against their BTC values. And if Bitcoin goes down, altcoins, cryptos, are going to keep going down against their USD value and their Bitcoin value. So the risk just increases dramatically by getting into altcoins too early, even though you might see the USD value go up. And I've heard all of the reasonings that many people give that their altcoins are going to make it, and you can see from previous cycles they do better returns than Bitcoin, yada yada. But the old cryptos only have a very short time span of doing well. And if you can't time that to a pretty good degree, you're absolutely wasting your time investing in those other altcoins. So let's get on to that as well, as we've covered the shorter term for BTC, as things may be turning around here. And let's point out that the low so far is at 24,900, only touched under 25,000 for a moment before reversing. It's not over yet. Maybe we still see some further downside because of what we've talked about with the seasonality here for Q3, leading into Q4, which we believe is going to be a stronger time for the stock markets and potentially BTC as well. But for now, things are trying to push higher. That is the target, 26,500. Now, onto the altcoins. So that's the toughest challenge to see for BTC. You've got the US dollar looking strong. You've got the seasonality for the stock markets as they come through Q3, but Q4 could be all right. But unfortunately for altcoins, yet again, they are looking weak. And unfortunately, 44% of people following on Twitter or who have replied to this poll that I did yesterday are buying altcoins in these dips. Now, I want everyone to succeed. I know 90% of people can't succeed based on the data, which is quite unfortunate. I hope there's a high percentage of people who are following along that can actually succeed in these markets, because time and time again, these altcoins keep dying out. Personally, I'm not buying these shit coins because they are absolute garbage until proven otherwise. It's my money, it's my hard-earned money, it's your hard-earned money. Throwing money into these markets without any proof, who's the greater fool? Let's leave it at that. But yeah, look, 44% are saying they're buying, 35% are saying no, they'll go lower. Okay, so they're going to buy later. And then 21% are only going to buy Bitcoin and or ETH. So another slower strategy to getting to the riches, but nonetheless, probably a safer bet, which of course is why there are lower returns. Less risk, less return. But if you guys want to trade these markets short term, like a lot of our members are doing, that link can be found in the video description as well. Just look at the TI Premium membership. You guys have been doing some fantastic returns on your short term trading. 100x leverage, I'm not suggesting anyone go that high. Nice gains there, 85%, another 40 odd percent there, 58, 500, 82 and 100. So links in the top of the video description there before we get on to the depression for the altcoins. This market is trending down, lower highs, lower lows. Any pressure, this is a very fragile market, so any pressure from Bitcoin is going to send this lower. Any pressure from the overall stock markets, if they start to go low and we see some volatility with those big high impact news announcements coming out, affects BTC, it's going to affect altcoins as well and potentially go lower. We're not on that uptrend yet. We are looking for a base to form, and then a breakout of highs. And that is basically your trigger signal to be looking for altcoin positions which are going to run hard and fast. Now, you're probably going to make better gains if you're buying here, but that's only if you buy the best altcoins out of the 26,000 that are out there. If you know how to pick one out of 26,000, please write us some ebooks, get on a YouTube channel and tell us how to pick the ones out of 26,000. There are plenty of people doing it. They have no idea and they're still making money. Go ahead and do it if you are better than them. But I'm not trying to pick one out of 26,000. I want to wait for the signals that the market is ready to turn. And this market does not look like it's ready to turn. It looks like it's going into depression when we bring up the Wall Street cheat sheet. As you can see, as we overlay this, the drop down drops into bounces into complacency, drops again into anxiety, into denial, into panic, into anger, and then into depression. And I think we're still going through that, bouncing through the lows, potentially into that depression before we can start to get that disbelief. And I think there's probably still at least 6 to 12 months away before we see any sort of breakout of the highs. And that's whether you're looking at the Wall Street cheat sheet, so there's your breakout of the highs, or if you're actually just looking at total 3 and then the breakout of those highs. Now, for the total cryptocurrency market cap, excluding Bitcoin, excluding ETH, and excluding the altcoins, which is not what total 3 gives you, this is our own TIA crypto total market cap, excluding these market caps, it's around 200 billion. To the downside, so forget these 3 arrows, 3 red lines here, you can turn those off. To the downside, looking at some of the previous support and resistance levels, so back towards these highs here in the market, could potentially be coming out at somewhere in 50% downside for cryptocurrencies. Now, if we take it a little bit more conservatively, maybe it's down about 20% on the altcoins. But I want to take it back to some of these highs here just before the breakout. That's at about 38%, to the swing bottom, 45%, and then to some of these highs here at 50%, and the previous highs are around 60%. So it's a pretty broad brush there at 20 to 60%, but you can see the level of risk still involved in altcoins as the trends are down. There is no breakout to the upside. Even on the more macro pictures here, you can still see the trends are down compared to something like BTC, where we've seen a cycle low put in and then a breakout to the upside. Although it's languishing right now, we're still seeing a breakout to the upside and then some tests of those previous lows. But for total 3, we had one test or attempted test at the high, and then it's failed from that point. So it's unfortunate, but I mean, this is just part of the cycle. Many are still trying to buy altcoins. This has happened throughout every single dip, whether it's on the daily, which is all the way back at some of these levels here, some of these days within the drops, people trying to buy these altcoins. And unfortunately, from those peaks to the current prices, they could be down somewhere around 80, probably closer to 90% on these alts. And before we get to the bottoms, like I did last cycle, you could see somewhere around 93 to 95%, which is what happened in the last cycle. If that was to happen for the altcoins, take a look at where it was at about 800 billion minus the stable coins. We go down to 83%, and somewhere around that 90-93% would take us back to those previous tops of this previous cycle. There's your 92%. So could be somewhere around that $100 or so billion market cap. Pay attention to that moving forward. I'm not saying it has to get there, but I think there is still further downside in the market cap for cryptocurrencies based on what we've looked at here in the macro picture for the macro environment of the US stock markets, US economy, Bitcoin, US dollar, plenty of data that we've gone through in this mega update for the unfortunate, I think, depression stage for the cryptocurrency market. But for Bitcoin, I don't think it's going to be as bad, although we can see some further downside. I can't see it being anywhere near as bad as cryptocurrencies. Make sure you like and subscribe. Link in the top of the video description for our free crypto and economic report. That one had the extra info on the US dollar. And of course, if you want more info on trading cryptos or just putting together your own investment plans, TIA Premium is the place to go. We have a lot of information over here with many, many members going through trading, short-term, long-term cryptos, real estate, stock markets, ETFs. That link is in the video description as well right there. Guys, I'll see you at the next video. Have a fantastic day. I'm out here in Naxos, Greece, and potentially the next videos I'll still see you here or in Santorini. Till then, have more fun to get more done. Peace out. Did you just make your way in here? Do you want a hug? Did you have a good nap?
Yeah.
Okay, great. Have a hug, and you go hang out with Mum and Dad finishes up on the computer.
Okay.